think, act, and prosper. You are now tuned into the Money Level Show.
Hello, everyone. Welcome back to the Money Level Show, where we think, act, and prosper. And today we're going to dive into how to read a company's financials. So this is important, especially as an intelligent investor, to know what you're getting into. What are you investing in? I know when I first started investing, I just started getting into any company. It didn't really matter. I was like, oh, I know this name. This is a big name, or that's a big name. And I didn't really do my due diligence of understanding, like, if this company has a lot of debt, or is this company going to survive in the future, like things like that, because how a company does financially can really show, like, if this company is going to be valuable in the future. And so you want to know these financials. You want to know what you're getting into whenever you're buying a part of a company by buying a share. So today we're going to focus on three things. The first thing is going to be the income statement, which shows like all the income that comes in, the revenues that come in minus liabilities. And then we're going to look at the balance sheets, which gives some more detailed information on what is actually in the income statement. And then we're going to look at the cash flows of how much cash does this company have on hand. So today we're going to be looking at a company that I actually invest in, which is EPD, which is Enterprise Products Partners. And this company does transport of commodities such as oil and things like that. So I actually like this company, and one of my favorite investors likes this company as well. And so that's what kind of drew me towards looking at this company and like, okay, I want to invest in them. So let's go ahead and dive in on my computer, and we're going to get into it. Alrighty. So today we're going to be looking at EPD Financials, Enterprise Product Partners. They are actually a transporter of commodities. So they transport oil, natural gas, things like that. This is a company that I actually invest in. So I just want to kind of give you guys just a glimpse of how I look at companies' financials and things like that. So looking at this one, I mean, this is from the NASDAQ. So sometimes I go directly to the company's investors relations, where you get more information about what the company's doing, what they're investing in, and stuff like that. But you can also go this route as well. So there's a few things you want to look out for: the income statement, the balance sheet, and the cash flow. So the income statement just shows, okay, what's all the income that they're receiving. The balance sheet breaks all that down of what exactly are they receiving, what exactly are the debts, things like that. I mean, because when you look at the balance sheet, which we'll go to in a second, you have some kind of vague items, interest expense, or, research and development, things like that, that will be broken down even more on the balance sheet. And then your cash flow is how much cash does the company have on hand, which is important because companies need to have cash to be able to either take advantage of investment opportunities or things like that. So the company has to have cash on hand. You don't want to have a bunch of real estate in a company and not have any cash. So that's important. So looking here, you have total revenue year over year. You see 2017. This is in the thousands. So with it being in the thousands, that means 100 is 100,000. 500 right here is 500,000. So 1,500 is 1.5 million. And then this is 241,500,000. And then this is 29 billion and 241,500,000. So that's how it works. So you're looking year over year. Okay, so 2017, they had 29 billion, total revenue, 36 billion, 32, and then 27. So this is a decreasing, but it doesn't necessarily mean it's a bad thing. We have to realize that last year we had COVID, and this company transports oil and natural gas. So when a lot of people stopped moving, a lot of people stopped flying, all those different things, this company obviously wasn't going to make as much revenue. So many companies like this had to shift, especially when the price of oil dropped and all of that. So but this is their total revenue for 2020. So it's going to be less than the prior years. So then you have the cost of revenue. Okay, so the cost of revenue is 22 billion. So this is how much it cost them in order to make that much. So this is how much they gross, 4,800,000, which isn't too far off of the prior years or whatnot, especially with it being COVID and everything. So here it's saying that they didn't spend any money on research and development. This is their sales, general and administration, how much are they paying their staff and stuff. So you have about 219 million that they're paying staff and doing for sales and stuff. And you have your operating income, additional income, expense items, earnings before interest and taxes. You got your interest expenses. So this is really just like, okay, well, how much does it cost for the debts that you have to pay, things like that. These are the earnings before tax. These are your taxes, how much you're paying in taxes. Your minority interest and some other things. So some of these terms, they change on different balance sheets. So especially when you look at the specific company, they kind of word things differently. So you have to kind of be aware of that. But I believe since we're on NASDAQ, it's actually going to be pretty consistent. So then we'll look at the balance sheet. All right, so now the balance sheet, these are the cash and cash equivalents. So as you can see, they have more cash on hand from last year. I mean, they probably made some shifts, cut some expenses because of COVID. You have your net receivables. This isn't actually cash. These are like cash that they are supposed to receive from people, whether that be contracts or things like that. So this is what they're owed. You have your inventory, which is 3 billion, which means that this is how much inventory they have or whatever products they sell or use or whatnot. So as you can see, their inventory increased from 2017 all the way to 2020. So I mean, that may or may not be a bad thing, but it just depends, because maybe they went into the year thinking that they were going to have a good year. They ordered more products than they needed or whatever, and now they have more inventory than the previous years. I mean, because this is $1 billion more than the previous year in 2019. These are other assets they have, total current assets. So then you get into long-term assets, long-term investments, fixed assets, goodwill, what are they doing for the communities and things like that. Intangible assets, other assets. So this just totals up their assets. This isn't how much cash they have on hand, but it just shows that these are their assets. So, and then you have your liabilities, which the balance sheet is supposed to balance out the assets and liabilities. So you'll see that at the end. So accounts payable, these are the accounts that they have to pay other people. You have your short-term, long-term debt, other current liabilities, long-term debt that they have to pay off. You can see their long-term debt increased year over year. So sometimes that's a red flag, sometimes it's not. Just depends on the growth of the company. And then you have other liabilities, which you see that they decreased that over the year. Deferred liability charges. This may have been related to COVID as well. Miscellaneous stocks, minority interest, and then you have total liabilities. So the liabilities did increase over the year, but also you look at their revenue as well. So their revenue increased as well. So it's not too much of a bad thing or whatnot. So then you have your stockholders. What do they owe as far as in stocks or equities or shares and dividends or stuff like that. So that's what that is. Then you have your cash flow, which shows how much cash is on hand, how much cash does the company actually have. So you have your net income, which is 4 billion, which is less than what was the previous 2 years. But then you have your depreciation of whether that's equipment, trucks that they're using to transport, buildings to store the trucks, stuff like that. Net income adjustments. These are other operating activities. So they have about, this totals out to be about 5 billion, almost 6 billion. You have your expenditures, investments, and other net cash flows, investing. You have your purchase and sale of stock, net borrowings, net cash flows, financing. So now you get down and you see your actually net cash flow, which is 748 million, which is the most cash flow they've had year over year. As you can see, in 2017, they had 347 million in the hole. The next year, they increased that to 339 million positive. Then 2019, they were 100,000 in the hole. And then now they have 748,000 or 748 million dollars in cash flow. So those are some pretty good financials from looking at it. I mean, that's one of the reasons why I invest in this company. Sometimes what I do is I have investors that I specifically follow. They may give a hint out to this company, or this is the company they're looking at and stuff, and I'll go in and kind of just read these balance sheets and see where they're at financially, see what they're doing, what they're about and stuff, and then consider investing in them. So that's how you do it. That's how you read a balance sheet. And then you can also go to the actual website, which is sometimes these sites like the NASDAQ or others, Yahoo Finance, they aren't updated regularly. So, so you may want to see the new financials that came out. So what I did was just EPD stock financials, and then you would click here, kind of go to their investor relations, and this is their financial reports. And what I would do is click their 2020K, which this is a big document. It's about 200 something pages. So I'm going to go ahead and skip ahead down to the financials. So here on page 73, you can see the income statement highlights, which goes over the revenues, the cost of sales, other operating expenses and things like that. And then they break down the revenues right here. Sale of crude oil, that's how much did they sell, natural gas pipelines and other things that they do. So that's how you pretty much find out more detail, is by going to the actual company's financials in their investor relations. So they have a lot of information in here, a lot. When I say a lot, there's a lot of information. So what you want to do is you have to kind of just go down and just really get into the weeds of this, which can be tough at times. So right now here we found a balance sheet further down the line, and so right here we found the balance sheets further down the line. So this gives a lot of information. You get the CEO's salary, who are the CEOs, and all of that. If you want to get into all that, you can. Especially if you're really attached to a company that you really love, you may want to do your due diligence. And I mean, you do want to do your due diligence and get to know, the company even more. This is a long-term hold for me, but it's not super long-term. Obviously it can change. They can have a poor financial year or things like that. So it just depends. This is the balance sheet. The dollars are in millions. So when you have 1,000 million, that's 1 billion. So you look at the different things. So these are kind of the same numbers from the NASDAQ, from the balance sheet over there. Then let's go ahead and find our cash flow statement. All right, so here's a cash flow statement, which is pretty much the same as the NASDAQ. That's pretty much how you do balance sheets and find things on a company. So. Alrighty, so I hope that was very helpful for you guys. I hope that I did not screw that up for you guys. I definitely was nervous kind of going into this, like, I know how to do it, but then they changed some of the language up on some of the balance sheets and things like that. So the NASDAQ site was really helpful as well. So I hope that you were able to learn something and how to look at a company's financials. Be sure to drop any advice or drop any questions you may have in the comments below, and I'll try to answer them as best as possible. But but the goal for the Money Level Show is to help educate so that we can all prosper, so that we can all come out of this together. So I want to thank you all for joining today, and peace.